Starting off the week with Gold Game Film and Frank Holmes coming up. And joining me now is Frank Holmes, who is currently at a mine site. Frank, where are you?
Today I'm in Colombia, looking at Gran Colombia's gold operations, the expansion. It's been a really challenging stock, and hopefully they can get this company turned around. It's the largest gold producer in Colombia.
All right, Frank, will you keep us posted of everything that happens over there? Now let's get started with Gold Game Film, of course. And off camera, just before we started, we were talking about the importance of PMIs this month. PMIs are going to be the main focus. Why is that?
Well, the PMIs got slightly softer, but I think that they still remain positive. And for us, that is the 1 month remains above the 3-month average, and that trend is your friend. So I think that that's what's key here. The sensitivity of weaker economic data in America, immediately we saw the 10-year bond soften up. So I think it goes to show that any fear of a softening economy, the government in the U.S. will keep interest rates low.
Let's move on to strengths for gold. Now, last week we saw disappointing jobs numbers that had a positive reaction for gold. The bullishness with geopolitics out in the Ukraine and the Middle East. You also noted that there's ETFs backed by precious metals that turn positive for the year. And of course, historically, the second half of the year is generally better for gold prices. So, Frank, is this all the perfect storm for gold to rise?
It's an incredible 35 years of data points. And so I think that's important, just to try to do probability analysis, to have the wind at your back rather than in your face. It doesn't guarantee it. It just gives you a higher probability of gold being in an uptrend. I think that gold stocks are much cheaper than the bullion for a couple reasons. In 2007, the cash flow multiples for gold stocks peaked at 24 times cash flow. They fell down to 4 in December of 2013. Now we're seeing them rise back to 6 times cash flow. The long-term average is 12 times cash flow. So if we get this rise in the price of gold, along with more confidence in the gold stocks, then we'll see a much bigger pop on a percentage basis in the gold stocks.
Now, looking at weaknesses on, I guess, with economic data on the flip side from the poor or disappointing jobs reports from last week, other economic data was very strong for the U.S. So is gold just going to track with the U.S. economic recovery, or are the BRICS going to play any part, maybe some struggling South American countries? Europe's always an issue. What do you think, Frank?
Well, you know, it's great that you asked, because the BRICS stocks as a whole, as countries, have done exceptionally well this year. Totally contrary to a lot of negativity even on gold, when people look at the charts and they're so surprised at how well gold and gold stocks have done. The BRICS also have done well, and this is highly correlated to global GDP rising. Remember, I shared with you a couple of weeks back that global real GDP peaked in 2011 when gold peaked at 1900. It fell from approximately 5.5% down to 3%, and this year is favored to be 3.5%. So we've seen the bottom, and we're slowly climbing out of this real tough, deep valley.
Before moving over to our OT segment, let's take a look quickly at mining. Gold miners last week, a lot of companies filed their second quarter financials. Any surprises for you there, good or bad?
I think they're continuing to be lean, and get their costs down. That's the most critical factor, because going forward, I think the big thing that investors are going to look at is profitable ounces of gold, not just growth for the sake of growth, but give me something that is profitable. So it is forecasted that there's going to be a supply shortage of gold coming out of mines. You're going to actually shrink in their overall production over the next 5 years. So I think as these companies become more focused on costs, this is positive for investors.
And sticking with miners for the opportunity and threats segment, in your SWOT analysis today, you did mention that balance sheets were getting cleaned up a little bit by gold miners going into 2015. So are you seeing opportunities there?
There are, and it's basically like the movie Show Me the Money, and McGuire. So it's so important just to see a lot of people make these forecasts to increase their production, and then they make these forecasts going to cut costs. Really, what investors are looking for, prove it to me. Forget the verbs and adjectives. Give me the noun.
And with threats, let's look at the U.S. dollar that you mentioned had a breakout recently. Now, you don't see it losing steam just yet, though, do you?
Well, one of the big things is taking a look at Europe's dilemma and the pound. You know, the pound came off against the dollar. So it's really not so much of a currency being strong, it's just relative weaknesses. So the other currencies are weaker than the dollar. So a better way I think you want to look at this stage, because the G7 countries, the finance ministers, these are as tax collectors, they are still caught up with this excessive regulation, and that's just going to continue to make it difficult to raise interest rates.
All right, Frank, let's take it home now with your touchdown pass for the week.
Well, just stay tuned to those economic data points that are coming out on CPI and other industrial production numbers. They'll be rolling out. And then for the S&P 500, many companies will be announcing earnings this week. And that will be compared to the previous quarter and the year over year, that we'll see a floor in the overall economic stock market.
All right, thanks for your time, Frank. You be safe out there.
Yes, and I'll show you a clip of where we are. Hopefully you can see still. But here we are. So lots of gun control. Protect the gold.
Protect the gold. Thanks for watching this edition of Gold Game Film. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com. Thanks for watching.